This is Edward Johnson, and today I want to talk to you about building a resilient insurance strategy. In construction, you're already gambling on schedules, subs, material prices. Don't also gamble with your insurance program. Look, you don't need another policy pitch, you need fewer surprises. The reality in our world, unexpected events are going to happen. What you can control is whether those unexpected events hit your balance sheet or just mostly an inconvenience. Insurance is really less about paper and more about cash flow, bankability, and staying in business when something blows up, literally or figuratively. Your lender, your surety, your best clients, they all quietly assume you've got this dialed in. But a lot of programs I review are basically a patchwork of, well, we've always had this, and, well, the broker said we needed that, with no real alignment for today's projects and risk profile. Start with a simple, honest assessment. Ask, where can we get hurt? On the job site, it's injuries, property damage, crane or equipment incidences. On paper, it's indemnity clauses, additional insured requirements, professional exposures on design assist jobs. Online, cyber attacks on your project management system, payroll, or BIM systems. Think of this like walking the job with a punch list. Until you actually look, you're guessing. Once you see the risks clearly, it becomes obvious which coverages are non-negotiable and which are nice to have. Next, line up the coverage with the risk picture. Yes, of course, you've got the usual suspects, your general liability, your workers' comp, auto, and umbrella. But in construction, that's really just the foundation. You're also going to need builder's risk to protect projects that are in progress, equipment coverage for owned or rented gear that's constantly moving around from one job site to the other, pollution liability if you disturb soil, do demolition or environmental work. What about cyber? If your operations rely on cloud tools, which is pretty much everyone now, there's a cyber exposure. For CFOs, the key question isn't, do we have this policy? It's, if this specific thing happens on that project, are we comfortable with the deductible, limits, and exclusions? Your business evolves. Project sizes change. You enter new markets. You add self-performed trades. If your insurance program looks the same as it did 3 years ago, there's a good chance it's out of sync. At least annually, do a policy walkthrough. The same way you'd review critical path schedule. What's new, what's bigger, what's riskier, and where do we need to change in order to make sure our coverage is adequate? Here's a simple checklist you can use this quarter. Pull your top 5 contracts and highlight the insurance requirements. Do your policies actually match them? List your 5 worst case scenarios by dollar impact. Are your limits adequate for those? Confirm who's tracking certificates and additional insured status on subs. Is there a gap? Review any new tech or markets or services you've added in the last 12 to 18 months, and have you told your broker about those? And decide what's more important this year, premium savings, broader protection, or smoother claims handling, and align your decisions to that. The biggest pitfall I see, buying purely on price, assuming all coverage is basically the same. In construction, small wording differences can mean the difference between a covered loss and a 6-figure check from your own back pocket. Cheap can be very expensive in our world. If you want straight talk, a review of your current program without the jargon or scare tactics, reach out. I'm happy to walk through your exposures and talk to you in plain English, where you're solid and where you might lose sleep. Thanks for watching. Now go out and make it a great day.